The British pound is down with about 1.3% this morning as the head negotiator on the EU side, Mr. Barnier, has denied that the UK and EU are close on finding a solution to the fishery issue. So that's what we're going to talk about today and how that has influenced the British pound. And we're going to cover the GBPUSD, but also the British pound against the Australian dollar. All right, so this is the British pound against the USD, and you can see that we're dealing with an uptrend up until recently, and it's something we actually communicated here several times. We talked about going long around these levels, and we've been trying to we've been suggesting that we're going to hit higher and higher and higher. And lately, we said many times that we're going to move up here, and we had the opportunity to trade this a few times as well. However, though, that's the end of that for now, at least. Now, it's always tricky, it's always difficult to get short or get involved just at a fresh break, especially when all the other markets are bullish. So it might just be a one-off, and then we're going to head higher, and then that's it. That's the end of it. But we can't really work with that. If we want to sell some dollars, there's better options, maybe like buying something like the Australian dollar versus the USD, buying here for it to go up. So if that's what you really want to do, then you can do that. But I wouldn't really do it here because of the situation, the political issue here. It's going to be very random. They can come out and say something like, "Oh, we have a deal in play, and everything's going to be good, and the UK is not going to leave on VTO levels," and then things you can see much higher prices. It could also be that we're already going to have a hard Brexit, and then we're going to go much, much lower. Of course, it's a bit too early for that yet. We still have a few more days and weeks, and technically nothing's going to happen until the end of the month. So it's a bit tricky. But from a purely technical perspective, we have a bounce to the upside, and here some people are probably going to be selling, and then probably going to attack the downside again. And for now, from a purely technical perspective, I'm going to continue to remain bearish below 135.41. Now, there are other options as well. I'm going to show you that now. And it's the British pound against the Australian dollar. And the reason why I like this better, because technically it's much more sound setup. So here is the GBP Aussie dollar, and you're looking at a 6-hour chart. And you can see that from October 22nd, we've been going lower and lower and lower here. Now, if we put a line like that, then you can see that this morning we traded below 79.81. And this looks a bit like a descending triangle. You could also argue it's a bit of head and shoulders with a left, right shoulder, head. I'm going to do like this. I'm going to actually take the base of the pattern and just going to project that lower. That would agree with the descending triangle pattern and with head and shoulders pattern, depending on how you look at this. And this suggests we can go all the way down to something like 76.36. And we just had the break to that level there. And here, from a short-term perspective, as long as we do trade below 80.73, this pattern is going to be in play. Of course, what we don't want to see is like a strong, solid close above 79.81. If we go up to 80 or something like that and then come lower, then that's all good. But we don't want to see a close here, because that would just sort of negate the whole move. It would be a reversal candle almost, because to be a proper reversal candle, we would need to close around 80.29. And that gives us a decent risk-reward ratio for further moves to the downside. All right, so we discussed two things today. We talked a bit about the British pound, how that's being influenced negatively because of the negotiations. We also talked about how it's not the best opportunity to short the GBP USD because of the technicals, which are bullish. And we showed you the alternative, which is the British pound against the Australian dollar. We also showed you another alternative, which is just the Aussie dollar versus the USD. If you think that the turmoil, the bit of risk off we're seeing now on Monday will blow over, because the Aussie dollar as well, why is it lower? Well, it's lower because stock markets in general are slightly lower, stock market futures, but also stock markets in Europe. And then you have a natural correction, because if you look at Euro USD, if you look at Aussie dollar, you look at New Zealand dollar, Euro yen, for example, all these pairs have been going up over the recent weeks on risk on and dollar sell-off. But obviously at one point, the dollar sell-off would slow down. and we would have a bit of a correction. And that's what we're seeing today here. And the challenge with that is it could have legs. It could have more dollar strength over the next couple of days. So I will be a bit careful. That's what I will be. But I think when things settle, we could potentially see a way out of here. And there are things to focus on. For example, stock market indices, which is really where I have my money right now. All right. Thanks so much for watching. Don't forget to like. Don't forget to subscribe. And I'll see you guys soon. Bye.